Hello, my dear CA final students. I'm sure and I strongly believe that you guys are staying at home and are absolutely safe and fine. In this pandemic circumstances where we are seeing multiple lockdowns across the country, I strongly believe that you are taking good care of yourself because health is first. So please do take care of yourself. Well, Shivateja is in front of you guys with regard to discussion about amendments, some exclusive amendments in CA final indirect tax laws, which are specifically made applicable for May 2021 exam. And I'm sure you guys know that May 2021 exams are now postponed to July 2021 positively. And the reason I'm saying positively because since past few days, I've been getting multiple phone calls and messages from the students asking me, sir, will ICA conduct exams in June? My blunt answer is can't say because it is subject to so many circumstances across the country where situation is not in our hands, where things are changing rapidly day by day. Of course, on a very positive note, we are glad and happy to see that the number of cases in India are coming down drastically. And strongly we hope and believe that things will settle down soon. And I'm sure whether you guys accept it or not, high possibility is there that exams may be conducted. And one point is clear, that is, if you are prepared for the exam, then why do you have to worry? It's always good that they conduct the exam, you finish off, come out as a chartered accountant. And if you are not yet prepared, my dear friends, it's high time and it's utmost time that you guys start your preparation and start becoming perfect. You can't take any more chances. It's high time that you completely focus on your preparation and completely focus on your studies. Clear? Now, before I begin, I want to tell two things, guys. Number one, there are some amendments, hardly actually it's just some 10-15 points, few amendments have been brought, which are specifically made applicable for May 2021 exam. Of course, July 2021. Now, there are some good number of amendments and good set of amendments which have been brought for November 2020 exam onwards. Why I'm saying onwards? Because one point is very clear. Whatever are the specific amendments which have been brought for November 2020 exam are also applicable for May 2021 exam. The reason why I'm saying this because one thing is very clear that I won't take much of your time for completing discussion on amendments specifically applicable from May 21 exam. But there are some good number of amendments which have been brought into picture, which were made applicable from November 2020 exam. So after I discuss this, I'll also spend some good time with you on discussion about what are those fantastic amendments which were made applicable from November 2020 exam, because they are also equally important. And there is a high possibility that amendments which have been brought and made applicable from November 2020 exam may also be questioned in May 21 exam, which we can't take any chance. So it is your utmost priority and utmost important that you guys get a clarity of thought even on those amendments also. Are we clear? All set and done, my dear friends. Our important areas of focus like 75 marks GST, 25 marks customs. Of course, 70 marks is your theory-based or practical-based question, and 30 marks is your multiple choice question, of which 20 marks will be case study-based MCQ. One point is very clear that when I talk about a case study-based MCQ, indirect tax has become such significant that ICI is trying to interlink the provisions from one topic to other topic. They are trying to frame one question where there is some concept related to time of supply, value of supply, place of supply, input tax credit, reverse charge mechanism, whatnot. So multiple areas are being combined together and framed as one question so that ICI will test knowledge of the student from all the angles, that is from a holistic perspective. There are also possibility that some questions will come straightforward from one particular topic, but at the same time, some good number of questions will come combining different topics as a package and they'll give questions to you. So it is very important that you get a great amount of clarity of thought on all these different kinds of topic, which is extremely important. Makes sense, right? Now, one thing what I want to tell you guys very clearly is that these amendments also will have a good weightage in the exam. There is a possibility that some good number of marks will come from this set of amendments what we are discussing now. Clear? Are we ready? Done. Now, for ease of preparation and for the comfort of learning, what I've done is that I prepared one presentation that is in the form of a slide deck or PPT. I've given all the important amendments in a simple and easy fashion so that we can happily learn and get a great amount of clarity of thought without any sort of trouble. So are we ready, guys? Are we ready to learn? Wonderful. I'm so glad and happy that you guys are get up to learn and get some great knowledge on the concept, guys. Come on, let's start the discussions. Proceed. Yeah. Let me share my screen so that you guys can also see the slide deck, guys. Yeah. So guys, I'm pretty sure now the screen is visible to all of you guys. Yes, wonderful. So guys, without any sort of delay, let's start discussion about what are the interesting amendments which are made applicable for May 2021 exam. Of course, now rescheduled to July 2021. And I'm sure you guys know the reason why they rescheduled, because of the fact that we are facing such kind of pandemic circumstance where things are completely out of control. We never know what is happening on a daily basis. So that's the reason why ICA have rescheduled their exams to July 21. And please don't ask a question once again, sir, will ICA conduct exams in July? Positively, yes, but it is subject to the criteria that most likely things should settle down, and it is happening. So high likely possibility that ICA will conduct the exam. But all said and done, let's spend some good time on discussion about some interesting amendments so that we are ready for the exam and counter the questions related to amendments. Ready? Come on. First, some interesting amendment in the topic of introduction. So what I've done is that topic wise, I prepared slides so that it will be easy for us to know what are the amendments in the respective topic. Introduction topic, please see that. Section 2 of CGST Act. Definition under clause 114. In fact, clause 114 defines union territory. Union territory means Andaman and Nicobar Islands, Lakshadweep, Jatra, Nagar Haveli, and Daman and Diu. And the interesting point is they added Ladakh here, Chandigarh, and other territory. For the purpose of this act, each of the territories specified in subclause A to subclause F shall be considered to be separate union territory. An important point to be noted in union territory is that we know that we have got two types of supply known as intrastate supply and interstate supply. In case of intrastate supply, we charge CGST and SGST. And in case of interstate supply, we charge IGST. IGST is one such thing which is levied and collected by central government, and then certain amount will be shared with the state government. But in case of intrastate supply, there is CGST and SGST which is levied. CGST is levied and collected by central government. SGST is levied and collected by central government. State government. CGST part, central government will take. SGST part, state government will take. That's why we technically call this as dual GST model, which we have taken from Canada. So India adopted what model, guys? Dual GST model. So what is the interesting amendment they have done? With regard to union territory, because in normal circumstances, we charge CGST and SGST. But in case of union territory, we charge CGST and UTGST. CGST and UTGST. See that what are covered in union territory? Andaman and Nicobar Islands, Lakshadweep, Jatra and Nagar Haveli, and Daman and Diu. Then Ladakh, Chandigarh, and any other territory. That's it. This is one small interesting amendment in the topic of introduction. Next, supply under GST. I'm sure we guys know that the concept of supply is dealt by section 7, something very important, because under GST law, any transaction is subject to GST only if that transaction is a supply. If it is not a supply, then there is no question of GST. That's why I always start using some statement that is GST will apply only if a transaction is supplied. Only if a transaction is supplied, then only GST will apply. So supply, apply are interlinking statement. So if transaction is supply, GST will apply. If transaction is not a supply, GST will not apply. Otherwise, GST will apply only if it is supply. Now see, earlier in Schedule 2, Friends, let me make you recollect. We actually had 3 schedules: Schedule 1, Schedule 2, Schedule 3. In fact, Schedule 1 was talking about transactions regarded as supply, even though there is no consideration. There were 4 sets of transactions which were covered in Schedule 1, which we learned that they are regarded as supply, even though there is no consideration. Number 1, permanent transfer or disposal of business asset on which ITC is claimed. Second, supply between distinct or related persons in the course or furtherance of business. Number 3, transfer of goods from principal to agent or vice versa. Finally, last point, import of services by a person from a related person or from any of his establishment outside India in the course or furtherance of business. So these are the 4 transactions which are regarded as supply, even though there is no consideration. You have to observe my beautiful language that they are supply, even though there is no consideration. So even though consideration is not there, still we will regard that transaction as supply. Then Schedule 2 talks about whenever a transaction is supply, whether it is supply of goods or it is supply of service, that is given by Schedule 2. And Schedule 3 talks about what are those transactions which are neither regarded as supply of goods nor regarded as supply of service. So it is neither a supply of goods nor a supply of service. So if it is not a supply of goods and it is not a supply of service, obviously what is the point? GST will not apply. Now see, earlier in Schedule 2, earlier in what, sir? Schedule 2. Come on, please see that. Guys, come on, concentrate. Earlier in Schedule 2, transfer of business assets, whether or not for consideration, was regarded as supply of goods. Further, if the goods held for purpose of business are put to any private use, otherwise an asset which is used for business, we started using that asset for personal purpose. Come on, we started using the asset for what purpose, guys? We started using the asset for personal purpose. So which asset we started using for personal purpose? Some business asset. Some what asset? Business asset we started using for personal purpose. Correct, guys? Come on, see now. For private purpose or for any purpose other than business, whether or not for consideration, then it was regarded as supply of service. Now what they have done, some interesting thing what they have done is that now the words whether or not for consideration has been omitted. Guys, what they have done, my dear friends, they have omitted. In other words, they removed that words whether or not for consideration. And what is the logic behind it? You see my language and logic for that. The logic is very simple. If there is no consideration, then a transaction is not regarded as supply unless it is covered in 7(1)(c), read with Schedule 1. I already told you that Schedule 1 has covered 4 transactions which are regarded as supply, even though there is no consideration. That's a very clear-cut point. That's why they removed that words whether or not for consideration. The logic being very clear that if there is no consideration, it is not a supply. So what is the line, guys? If there is no consideration, it is not a supply unless it is covered in section 7(1)(c), read with Schedule 1. Because Schedule 1 talks about transactions regarded as supply, even though there is no consideration. Clear? Next. Charge of GST. Specifically, we are talking about the topic of reverse charge mechanism. Guys, first of all, what is RCM? We know one fundamental area that whenever supplier is supplying services to a recipient, generally the person liable to pay GST is always the supplier. Come on, guys. Generally, who is the person liable to pay GST? Generally, the person liable to pay GST is always the supplier. But there are some special cases where recipient is liable to pay GST. Those cases are known as reverse charge mechanism. Name only says reverse charge mechanism. Reverse charge mechanism is those cases where supplier is not liable to pay GST, recipient is liable to pay GST. Who is liable to pay GST? Recipient is liable to pay GST. Now here, some special point I'll tell you. Listen. So let's say there is a director. Director is supplying some service to a company. Now, one point, let me tell you very clearly, whenever director is supplying service to a company, there was one point in the law, which is covered under section 9.3, which says that service supplied by director to a body corporate is covered under reverse charge mechanism. That means for this kind of transaction, who is liable to pay GST is the company. But one more special point is to be noted here. That is, as per section 7.2a, read with schedule 3, which talks about transactions which are neither regarded as supply of goods nor supply of service. There is one point which says services by employee to employer. Services by what, sir? Services by employee to employer. Who is given to whom? Services by employee to employer in the course of employment is neither regarded as supply of goods nor regarded as supply of service. That means on that, GST will not apply at all. So service by employee to employer is not taxable at all. Now, one point you have to understand is when a transaction is not taxable at all, there is no question of reverse charge mechanism. That's why here one point you have to note is that it is not necessary that every director is an employee. There is a possibility that there are some directors who are not employees and there are some directors who are an employee. For example, when I talk about a managing director, he is generally an employee. So whenever remuneration is paid to an employee, on that GST will not come at all. But if the director is an independent director, then definitely he is not an employee. Then on that service, GST will apply, and moreover, reverse charge mechanism will apply, and company will be liable to pay GST. Here, the special point which I want to tell you is that how do we segregate practically whether director is a employee or not? Practical purpose, my dear friends, in income tax provision, we have got two interesting sections. Section 192, section 194J. 192 deals with TDS in case of salaries. TDS in case of what, sir? Salaries. And 194J deals with TDS in case of director remuneration other than salary. So, if salary is paid to director, TDS is done under section 192. If there is any other remuneration which is paid to director other than salary, then TDS will come under 194J. So now the concept is very clear. If some TDS is done under section 192, then very clearly GST provisions will not come because it's an employee. Service by employee to employer in the course of employment is out of GST. But when TDS is done under section 194J, that means director is a professional. Then definitely GST provisions will come into picture, and moreover, reverse charge mechanism will apply. That is, company will be liable to pay GST. See that? Independent directors or directors who are not an employee. And this point is clarified by circular number 140 by 10 by 2020. What is circular number? 140 by 10 by 2020, dated 10th June 2020. 10th June 2020. Remuneration paid to directors who are not employees of the company shall be subject to levy of GST in the hands of company under a reverse charge mechanism. Of course. C1 note, author's note, C1 note, what again? If TDS under income tax is done under section 192, then provisions of RCM will not apply. Obviously, common sense, RCM will not apply because GST only will not apply. However, if TDS is done under section 194J, that is TDS on fees for professional or technical services, GST is payable on such remuneration by the company under a reverse charge mechanism. Clear, guys? So if payment made to director, if TDS is done under section 192, then RCM will not apply. If TDS is done under section 194J, then definitely RCM will apply. GST will apply first of all, and RCM will apply, and company will be liable to pay GST. That's it. That is the story of this interesting amendment, guys. Clear? Next point. Exemptions. Some interesting amendments in exemptions topic. See that? Service by way of transportation of goods by an aircraft from customs station of clearance in India to a place outside India. Same point I'll read next to see. Service by way of transportation of goods by vessel from customs station of clearance in India to place outside India. Something like service of transportation related to exports. And this exemption was available till 30th September 2020 was the exemption deadline. and they extended till 30th September 2021. So the exemption is not a new point. This is already there, but just that the duration of the exemption has been extended. Next point. Satellite launch services supplied by Indian Space Research Organization. So what is that line? Satellite launch services. Satellite is being launched. Satellite launch service supplied by whom, sir? Indian Space Research Organization. ISRO. You would have heard this word many times. Newspaper, TV, everywhere. Satellite launch service supplied by ISRO, Antrix Corporation Limited, or New Space India Limited. This is newly inserted and this is straight away exempt. Interesting point, and of course, a new point. Next. Registration, something very, very interesting, and of course, very, very important. Clear? Now, first, let me highlight some interesting point here, guys, which I want you to listen for sure carefully. Then we can talk further. So, whenever we talk about registration, first, always we will apply for registration in form GST REG 01. We'll apply in which form? GST REG 01. And once we apply in GST REG 01, one interesting point to be noted here is that we get an acknowledgement in GST REG 02. We'll apply in which form? GST REG 01, and we get acknowledgement in GST REG 02. Now, the point to be noted is that once we apply, generally what happens is within 3 working days, straight away, PO may grant registration. One possibility. Straight away, one possibility that PO may directly grant registration. Second possibility, PO may issue notice seeking clarifications. So that means some documents what we have submitted, proper officer is not satisfied with that. He's seeking additional documents. Correct, my dear friends? Now, one point you have to understand is that recently they introduced one new fantastic concept, my dear friends, and that concept is known as Aadhaar authentication. Come on, what is that concept, my dear friends? Aadhaar authentication. Now, what is this Aadhaar authentication? We know that nowadays everybody in India has got Aadhaar. Your PAN card is linked to Aadhaar, bank account is linked to Aadhaar, subsidies are linked to Aadhaar, everything is now being linked to Aadhaar. In the similar manner, they introduced this concept of Aadhaar authentication in GST, wherein if you are a company, then the managing director should undergo Aadhaar authentication. And if it's a partnership firm, the managing partner should undergo Aadhaar authentication. And if it's a sole proprietor, the sole proprietor should undergo Aadhaar authentication. What does that mean? So basically, at the time of registration itself, we will select whether we want to opt for Aadhaar authentication or not. If we opt, what will happen? Very simple, my dear friends. One link will come to the email address what we give at the time of applying for registration. And when we click that link, one OTP, that is one-time password, will go to the mobile number registered in Aadhaar. So one OTP will go to the mobile number registered in Aadhaar. And once we enter that OTP, my dear friends, Aadhaar will be validated, or other words, authenticated. Clear, friends? The fundamental idea is very simple, that from Aadhaar, they will pull all the address details, photograph details, all the details. Of course, sometimes we don't like to see our own photograph because dangerous photographs we have in Aadhaar, but all said and done, GST department will pull all the data from Aadhaar. Now you'll get one doubt. So what will happen if we don't undergo Aadhaar authentication? Simple language. First point, this 3 working days is substituted by 21 working days. So in case Aadhaar authentication is not done, or if Aadhaar authentication fails, then this 3 days word is substituted by 21 days. First to foremost important point. Next, second interesting point, if Aadhaar authentication is not done or it is failed, then registration is granted only after physical verification of premises. So officer will come and conduct a physical verification of premises and then only grant registration. Sometimes they may grant even without physical verification, but the point to be noted is that with approval of joint commissioner, they can grant even without physical verification. But general point is that if other authentication is not done or if other authentication failed, then registration is granted only after physical verification of premises. Come on, let's go back. Read the line, come on. Concept of other authentication is introduced. The date of submission of application in such cases shall be the date of authentication of other number when it is authenticated, or 15 days from submission of application in part B of REG 01, whichever is earlier. Next line you see, generally when application is made, PO responds within 3 working days. Already I told you, that is, he will either approve the registration or issue a notice seeking additional information or documents. I just told this point. Next line you see, in case where other authentication is not done, then PO would respond within 21 working days. That's a great point. Further, registration would be granted only after physical verification of premises, and the verification report along with other documents, including photographs, shall be uploaded in Form GST RAG 30 on the common portal within a period of 15 working days following the date of such verification. Such an interesting concept. High possibility that one question will trigger an exam related to the concept of other authentication. Be ready. Clear? Next. See the next line. Proper officer may, for reasons to be recorded in writing and with approval of an officer not below the rank of Joint Commissioner. I told this to already. Not below rank of Joint Commissioner, in lieu of means instead of physical verification of place of business, carry out verification of such document as he may deem fit. That is, with approval of Joint Commissioner, even without physical verification, registration may be granted. Clear? Next line. Other authentication means a link would be generated and sent to the mail ID given at the time of registration. Already I told this to you. Upon clicking such link, OTP would be sent to the registered mobile number in Aadhaar. And once OTP is entered and validated, other authentication would be done. I told this to already. Next, concept of other authentication will not apply to a person who is not a citizen of India. Very logical also, because somebody who is not a citizen of India will not hold Aadhaar. So how can you trouble him saying, come on, get your other authentication done? Will not trouble him. Clear? Next point. Some amendments related to the concept of tax invoice, guys. Small point, but interesting. See that first. Board may, on the recommendation of council, by notification specify. What is board? CBIC. CBIC means Central Board of Indirect Taxes and Customs Council, GST Council. Article 279A, where there are central members and state members. Yeah, now specify number of digits of harmonized system of nomenclature. That is HSN code for goods and for goods, or services case it is SAC, Service Accounting Code. And in generally HSL is 8-digit code, SAC is 6-digit code. That a class of registered persons shall be required to mention, or class of supply of goods or services for which specified number of digits, how many digits should be mentioned of HSN shall be required to mention by all registered taxpayer. Finally, the class of registered persons that would not be required to mention HSN code for goods or services. Clear? Next, this point is interesting and important. That is related to e-invoicing. This concept of e-invoicing has been introduced last year. Important. Where presently, in fact, as per law, originally they told 500 crores. That means those entities whose aggregate turnover is exceeding 500 crores, they were required to follow e-invoicing. But subsequently, they changed the limit to 100 crores. And in fact, recently they modified the limit to 50 crores also, with effect from April 2021. But of course, for your exam, it is 500 crores, but also tender and practically it is different. And what is the concept of e-invoicing, first of all? E-invoicing is a concept where there is a government e-invoicing portal where we have to go there and enter the details of our invoice. Then one QR code will be generated. and that QR code is required to be printed on our invoice, and that is called as e-invoicing, electronic invoicing. Now, e-invoicing doesn't mean that we will generate invoice on the government portal. It is just that we will generate invoice using our own customized software or our own accounting software, and that details are entered in the government e-invoicing portal, so that when QR code is generated and government will track the details right from the beginning. And these e-invoicing numbers or the details or the figures given in the e-invoicing portal will directly transmit into GST returns. Clear, guys? Very popular and very interesting concept. As per notification number 13 by 2020 CT dated 21st March 2020, government on the recommendation of council hereby notifies a registered person whose aggregate turnover, whose what turnover? Aggregate turnover, which is defined by section 26, which says aggregate turnover covers all taxable supplies, exempt supplies, interstate supplies, and exports on all India basis under the same PAN, whose aggregate turnover in any preceding financial year from 17-18 onwards exceeds 500 crores. Of course, I told you practically it is reduced to 100 crores and again further reduced to 50 crores also. But here exceeds 500 crores as a class of registered person who shall prepare invoice in terms of sub-rule 4 of Rule 48 of the said rules in respect of supply of goods or services or both to a registered person or for exports. Next slide, you see. This provision is not going to apply on a special economic zone unit. What is SEZ unit? On a SEZ unit, not a SEZ developer. So this provision is not going to apply on a SEZ unit. What is a SEZ? Special economic zone are those areas which are notified by the government, which are given some specific income tax incentives, and they are treated as if they are outside India. That's called a SEZ, special economic zone unit. So this provision is not going to apply on SEZ unit, insurer, banking company, financial institution including NBFC, GTA, goods transport agency, passenger transport service, Indigo, SpiceJet, service supplying service by way of admission to exhibition of cinematograph film in multiplex screens. So basically theaters, these guys do not follow this concept of e-invoicing. So these are the interesting amendments with respect to that e-invoicing. Now, simple language you see now. E-invoicing means the details of the invoice are entered on the GST e-invoicing portal, which is called as IRP, Invoice Registration Portal. And then an invoice reference number is generated, that is in short known as IRN, Invoice Reference Number, and the details of such IRN should be printed on the invoice, and also a QR code is generated along with IRN. What is QR? Quick response code. IRP will also send e-invoice data to GST portal for the purpose of e-way bill and also for filing GSTR1. And the concept of e-invoicing is only to intimate to the government and to ensure that there are no fake invoices. Because in e-invoicing, we can't generate 10 days back invoice. That's not possible. So after e-invoicing, GST invoice will be valid only with a valid IR. What is IRN? Invoice reference number. So these are the interesting amendments with respect to that concept of tax invoice. And one more line you see related to accounts and records. In case e-invoice is issued, the QR code, what is QR? Quick response code having an embedded IRN, that is invoice reference number in it, may be produced electronically for verification by PO in lieu of physical copy of such tax invoice. So just show that QR code, they'll scan it. So basically the idea is very simple, that a check post, when the vehicle is stopped, they'll just stop the vehicle and scan that code and pull all the details related to that goods. That is the fundamental idea behind all this concept, guys. Clear? Go on next. So guys, we are done with discussion about amendment related to accounts and records also. Now let's move forward to discussion about some more balancing interesting amendments. As I told you, we just have a few more balanced interesting amendments, guys. One point you have to keep in mind very clearly, that when I talk about amendments applicable for May 2021 exam, which is now scheduled for July 2021, the point is very clear that the number of amendments brought for May 21 exam are comparatively less as compared to November 2020 exam. So all said and done, since there are very less amendments for May 21, there is a high possibility that amendments of November 2020 may be questioned in May 21 exam, which is scheduled in July 21. Clear, guys? So after this, we'll talk those amendments also. No compromise at all. Come on, next. Let me talk about now some interesting amendments related to the concept of e-waybill, guys. Please see that. What is the interesting amendment? What is e-waybill? First of all, we know that this concept of e-waybill will come into picture only when there is a movement of goods. This concept of e-waybill is not applicable to services. This is applicable only to goods. That too only when there is a movement of goods of consignment value exceeding 50,000. So whenever there is a movement of goods of consignment value exceeding 50,000, not exactly 50,000, exceeding 50,000, then only these provisions of e-waybill will apply, which is a mandatory document. And there are some special cases where e-waybill should be generated even though consignment value does not exceed 50,000. Like classic example in case of handicraft goods. Second example, in case of goods sent from principal to job worker. Like this, there are a couple of interesting cases where e-waybill is mandatory even though consignment value does not exceed 50,000. But in general, e-waybill is mandatory only when there is a movement of goods of value exceeding 50,000. Come on, see next. In certain cases, generation of e-waybill is blocked. Which cases? Come on, number one. Person under composition has not furnished statement for payment of self-assessed tax. In fact, there is one form known as GST CMP 08, which is to be filed on quarterly basis. And in fact, that is a statement for quarterly payment of tax. And that will be filed by a person who is registered under a composition scheme. So please see that. Person under composition has not furnished statement for payment of self-assessed tax for continuous 2 quarters. So if he has not furnished the CMP 08 for continuously 2 quarters, then e-waybill generation is blocked. And second point, very dangerous and very popular point. Person under regular scheme. What scheme, guys? Regular scheme. We are not talking about composition. See that. Person under regular scheme has not furnished returns for 2 consecutive months. So for 2 months continuously, if the returns are not furnished, then done. There ends the story. His generation of e-waybill is completely blocked. Clear? Next point. Persons under regular scheme has not furnished GSTR 1. What is GSTR 1? It's a statement of outward supplies, which is generally to be filed on monthly basis. But persons whose aggregate turnover does not exceed 1.5 crores, they can file on quarterly basis instead of monthly basis. That is why please see the language what they are given. Person under regular scheme has not furnished GSTR 1 for any 2 months or quarters. Very interesting line there. Come on, see an important note. Commissioner, who's that, my dear friends? Commissioner may allow generation of e-waybill on sufficient cause being shown and for reasons recorded in writing. So commissioner may what, my dear friends? Commissioner may allow, he may allow generation of e-waybill on sufficient cause being shown. So if sufficient reasons are shown, then commissioner may allow generation of e-waybill on sufficient cause being shown and for reasons recorded in writing. These are the interesting amendments related to the concept of e-waybill. Next point. Some amendment related to payment of tax. Something interesting and important. Let me explain you here very clearly, sir. Sir, let's say for example, a person is required to pay an output tax of 100 rupees. And let's say he has got 40 rupees as input tax credit, which will reflect in electronic credit ledger, and the balance is nothing but 60. And this 60 he will pay using electronic cash ledger. And how will money come in cash ledger? We should deposit the money in cash ledger, and from that cash ledger we'll use it for the purpose of payment of tax. Now, one point is very clear, my dear friends. As per provisions of section 50, in case of delayed payment of tax, there are interest provisions. And in general, the rate of interest is 18% per annum. But in case where excess credit is availed, what is that line, sir? In case where excess credit is availed or less output tax is shown, then the interest rate is 24% per annum. In general, interest rate is 18% per annum. But in case where excess credit is availed or less output tax is shown, then the interest rate is 24% per annum. Now, in this context, some interesting point let me discuss with you. That is whether interest will come on 100 or interest will come on 60. They have clarified that interest will come only on 60. Otherwise, interest will come on the amount payable after adjusting input tax credit. Read the line, come on. Interest on tax payable in respect of supplies made during a tax period and declared in the return for the set period furnished after the due date. When it is furnished after the due date, in accordance with provisions of section 39, shall be levied on that portion of tax that is paid by debiting electronic cash ledger. So in my example, interest will be calculated only on 60 but not on 100. Next slide. This provision shall not apply where such return is furnished after commencement of any proceedings under section 73 or 74 in respect of the said period. What is 73? 73 talks about determination of tax not paid or short paid or ITC wrongly availed or utilized or refund claimed erroneously by reason of other than fraud, misstatement or suppression of facts. Other than what? Fraud, misstatement or suppression of facts. And 74 applies in case of fraud, misstatement or suppression of facts. Clear, friends? So if return is furnished after commencement of any proceedings under section 73 or 74, then this point will not apply. In that case, interest will come directly on 100. If it's a regular return, normal return, general monthly basis, then interest will come only on that amount of tax paid using cash ledger. So see one explanation what I gave, simple line. This means that interest would be computed only on the amount paid using what ledger? Cash ledger. So only to the extent of that amount paid using cash ledger, only on that amount interest is computed. Getting clarity, guys? Very interesting and important points. Next, let's talk about a small amendment in topic of returns. In fact, this is pretty simple and easy. Nothing is there in this. The only thing what they told is that if the return is a nil return, you can file this return using an SMS facility. You can just send an SMS and one OTP is generated and we click that OTP. If you enter that OTP, it's done. Nil GSTR1 can be filed through an SMS using the registered mobile number of the taxpayer. GSTR1 submitted through SMS is verified by registered mobile number based OTP facility. That's what I just told you. What is OTP? One-time password. Same logic for GSTR3B. Same logic for CMP08. CMP08 is a statement for quarterly payment of tax by person registered under a composition scheme. Clear? Make sense? That's it. Next. Now let me talk about a couple of interesting amendments related to topic of refunds. Yeah, see that? Circular number 125 by 44 by 2019 GST dated 18 November 2019 permitted refund of accumulated ITC even in respect of invoices not reflecting in 2A. What is 2A? We know that when supplier files GSTR1, that invoices will auto-populate in GSTR2A. So once upon a time, there was a provision which said that even though that invoice is not reflecting in 2A, you are allowed to claim refund. And this was subject to uploading copy of such invoices by the applicant along with the refund application. But in fact, recently they removed this concept where they told you can take credit only to, you can take refund only to the extent of credit reflecting in GSTR2A. What is not reflecting in GSTR2A, you forget it. But however, one point is very clear. CBIC has clarified through circular number 139 by 9 by 2020 dated 10th June that this restriction shall not apply to ITC refunds pertaining to invoice or documents relating to imports. Obviously, ISD invoices, inward supplies liable to RCM because these were not auto-populating in GSTR 2A. But now, in practical scenario, things have very much changed because now these invoices are also reflecting in GSTR 2A. Clear, friends? Done. Next. A small amendment related to topic of demands and refunds. Demands and refunds, see that? Demands and refund. Remember 73, 74. Just now I told you that 74, determination of tax not paid, short paid, ITC wrongly availed or utilized by reason of other than fraud, misstatement or suppression. 74 in case of fraud, misstatement or suppression. See that proper officer, they removed that word shall and replaced with that word may. Proper officer may, before service of notice to the person chargeable with tax, interest, penalty under subsection 1 of 73 or subsection 1 of 74, as the case may be. Shall word they removed. What they have done, as the case may be, communicate. So before issuing notice, what he will do? Before issuing notice, he will communicate the details of any tax, interest, penalty as ascertained by the officer. Who is that officer? Proper officer. In part A of GST DRC 01A. In fact, DRC stands for demands and recovery. That's how we would have observed that in registration, you will find the form as REG. Correct, guys? Then GST returns, you will find GSTR, and here it is DRC, demands and recovery. So in DRC 01A, proper officer may communicate what are the details of the tax, interest, penalty payable before issuing notice or before service of notice. Clear? Point. Miscellaneous provision. Small point, please see that. If any difficulty arises in giving effect to any provisions of this act, government may, on recommendations of the council, obviously, by a general or special order published in official gazette, make such provisions not inconsistent with provisions of this act. Obviously, any recommendation or any point given should not override the act or the rules, regulations made thereunder, as may be necessary or expedient for the purpose of removing the difficulty. So for the purpose of removing any difficulty in the acts, government may publish in the official gazette any general or special order, they'll give that. But no order shall be made after expiry of 3 years. And this 3 years point, they substituted by 5 years. The reason being very clear that Act came into effect from 1/7/17 and 3 years was coming to end on 30th June 2020. And since the time was passing away, they wanted to take 2 more years time so that it becomes 30th June 2022. Clear? And that date, what I gave, is the date when GST is implemented in India. Clear? But what is the line given here? No order shall be made after expiry of 5 years from the date of commencement of the act. So from when this commencement of act has been done, they have got a time limit of 5 years to remove any difficulty in the act. For example, if any inconsistent provision is there, they'll make it consistent. There are miscellaneous provisions. Possibility is there that 4 marks may trigger in the exam. So we can't take chances. Then every order made under this section shall be laid as soon as may be after it is made before each house of parliament, Lok Sabha and Rajya Sabha, and their approval is taken, only then it will be passed. Clear, guys? Next, customs duty. Like how in GST we have got a concept of electronic credit ledger, they introduced similar concept of electronic credit ledger even in case of customs also. See that central government may specify the manner in which it shall issue duty credit by notification in official gazette in lieu of remission, or that is waiver or refund of any duty, tax, levy chargeable on any material used in manufacturing or processing of goods or for carrying out any operation on such goods in India that are exported. They're exporting some goods or in lieu of such other financial benefit subject to conditions and restriction. So in simple terms, if there is any refund to be given or any remission to be given or any duty drawback is to be given, that will not come back in cash manner, that will come back in the form of electronic credit ledger. So they're going to set up this ledger of electronic duty credit ledger, which will be used for payment of customs duty. Like how in GST we have got electronic credit ledger, same concept is being introduced even in case of customs also. Clear? Next. See that the duty credit ledger shall be maintained in customs automated system in the form of an electronic duty credit ledger of the person who is the recipient of such duty credit. and the duty credit available in electronic credit duty credit ledger may be used by the person to whom it is issued or the person to whom it is transferred. May be used by the person to whom it is issued or the person to whom it is transferred towards making payment of duties payable under Customs Act or under Customs Tariff Act. Clear, guys? That's what I told you, my dear friends. Not much of amendments are there which are specifically made applicable for May 21, that is July 21 exam. But there are some more interesting amendments which were made applicable for November 20 exam, which are also important for May 21 exam also. Even that I'll discuss with you. Clear? Next. Customs duty. Same point, see. Duty credit ledger will enable credit in lieu of duty remission to be given in respect of exports or other such benefit in electronic form for its usage and transfer. For instance, reward scripts under MEIS. What is MEIS? Merchandise Export from India scheme, or SCIS, Service Export from India scheme, reward scripts that are usable against payment of customs duties can be credited to this ledger for usage or transfer. Then, duty credit ledger is a step in the right direction to streamline the process of availment of export benefits by removing the physical interface and also assure, that is increase transparency by avoiding fraudulent claims. So instead of money directly coming and sitting in the account, that remission or duty drawback or reward scripts will go and sit in duty credit ledger, which is maintained electronically. Clear? Done. Finally, last interesting slide, which is related to one to small amendments related to foreign trade policy. Yeah, this foreign trade policy was supposed to end on 31st March 2020, which is actually extended to 31st March 2021, which is again extended to 30th September 21. Considering the pandemic circumstances, the existing foreign trade policy is only being extended. See that 2-3 interesting points. Number one, import of goods, including those purchased from e-commerce portal through post or courier, where customs clearance is sought as gift. So you are taking customs clearance, telling that it is a gift. It is a gift. I did not buy it. It is only a gift. Is what, my dear friends? Prohibited. Import of goods, including those purchased from e-commerce portal through post or courier, where customs clearance is sought as gift, is prohibited except for life-saving drugs or medicines and Rakhi. Clear? Then second, MEIS, Merchandise Export from India scheme, though being currently operational, shall be phased out after 31st December 2020, gone. And the new scheme RODTEP, that is remission of duties and taxes on export products. What is that line? Remission of what? Duties. Remission means something like refund of duties and taxes on export product would be made operational from 1/1/21 as per the latest announcement by Ministry of Commerce and Industry. But so far, nothing has been done. Nothing has been done so far. Further, no announcement has been made in relation to SCIS. With respect to SCIS, they have not made any announcement so far. Clear, guys? That's it. So these are the very, very interesting amendments which are applicable specifically for May 21 exam, which is now scheduled in July 2021. Now, let me also spend some good time with you guys on discussion about amendments which are applicable from November 20 exam onwards, because high possibility that they will also trigger the exam. Come on, see now.